Hello everybody, my name is Deven Ved. I am the co-fund manager at Alchemy Capital Management. Today I am here to talk about Alchemy Ascent. Alchemy Ascent is a rule-based quant strategy which leverages data and technology in an endeavor to create consistent alpha. The strategy, by the virtue of being a rule-based quant strategy, is unbiased, consistent, data-driven and result-oriented in its approach. What one needs to do is analyze a lot of data to get that right theme, right cycle, right sector and right stock. Even the most experienced fund managers are prone to biases, which is inherent in this investment process. We at Alchemy analyzed historical data. We looked at market winners and market losers. What were their inherent parameters and factors which were present there? Then we identified these parameters. The beauty here is that these parameters were not in isolation. What we did here was we created a cross-sectional intersection of these parameters and created 250 odd nodes. For each of these 250 nodes, we bucketed them into 4 categories. 1. Fundamental. The business growth, the sales growth. 2. Valuation. What is the valuation with respect to the benchmark, with respect to the industry and peers? 3rd, the market cycle, the momentum, the price action of the particular stock. And 4th, and the important one, is quality and risk metric. What is the balance sheet quality of that particular company? So for each of these nodes, we give a positive mark or a negative mark. Let me give you an example. If a company is growing at an above average industry rate and an above average industry margin, then that node for us becomes a positive node. We give positive marking for it. And if a company has a high debt to equity ratio and most of the earnings are going into servicing interest cost, that becomes a negative node for us. We give negative marking. But what happens when a positive and a negative attribute comes together? Let me give you an example. For example, if a company is growing at a very good rate in the balance sheet, but there is no cash conversion which is happening, then that becomes a negative node for us and we give negative marking. So at the end of the day, what happens is each of these companies are presented with these 250 questions and they're ranked and marked along with it, which is where the Ascent proprietary algorithm comes in. Now we come to the portfolio creation part. Our investable universe is the top 500 companies by market cap. We have ranked the companies and then we create a portfolio. A portfolio is usually about 20 to 25 stock portfolio. The stock weights will be anywhere between 3 to 5% depending upon the marks that the stock has got through. But if a candidate is very good and the marks are very high, then we go up to 10% at cost into building a portfolio. Stock selection is on the basis of the marks attained by the company. There are no sectorial anchors to the benchmark, which means that Ascent strategy has the ability of going overweight and underweight into a particular sector depending upon how it perceives and ranks the stocks. This gives the ability to take those sectorial bets to create that additional alpha. Alchemy Ascent is a bespoke strategy. By the technology that we have developed here, we have the ability of analyzing the stock every single day. The stocks which provide a better risk reward metric on the date of investments are then taken to be part of the portfolio. The deployment of the cash is generally done within a week depending upon the stocks qualifying in the strategy. Now that the portfolio has been created, the next important step is that of portfolio monitoring. In that we have noticed that if you argue with the markets on the upside, you tend to lose your upside potential, and if you argue with the markets on the downside, you tend to take on more risks. So in Alchemy Ascent, we let the winners ride and we cull the losers in the strategy. On an ongoing basis, each company is then evaluated with respect to its peers and benchmark. If a company's rank falls and is not performing, then A suitable candidate which provides a better risk reward metric will come into the portfolio and the non-performing stock will move out from the portfolio. Important thresholds have been built into the strategy. If a stock breaks these critical thresholds, then the stock moves out from the portfolio irrespective replacement is available or not. This gives Ascent the ability of sitting on cash when risk reward is not in its favor. Alchemy Ascent strategy has taken years to develop and refine. We have backtested this strategy for over 20 years and seen the results through various market cycles. Alchemy Ascent has been live since September 2019, a period after which many of you all will agree was a very challenging period for the market. We had a black swan event, COVID. We had a war, which was the Russia-Ukraine war. We had the interest rate cycle tightening and general elections. You would be glad to know, through these phases, Ascent has turned out and triumphed and has given better returns than the benchmark, giving a positive alpha. Over the past years, has shown the strategy's ability to scan for investment opportunities daily, pick market winners, and create cash when risk reward was not in favor in an unbiased, disciplined, consistent approach. An investor who has an investment horizon of 3 to 5 years should consider investing in Alchemy Ascent. Our team will be more than happy to share further details about the product. Please do reach out to us to give your investment that technological edge. Thank you.